following is a presentation of TFNN. Live at TFNN, the Money Masters. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, the Money Masters.
Good day, Money Masters and Treasure Hunters. Welcome to the March 31st. How about that, folks? March is almost over, and it is the marvelous Monday edition of the Money Masters Show. Thanks so much for joining me. I'm your host, Steve Rhodes, and I'm grateful for your presence here today. My outcome, as always, is to help you to become a better money master and to provide you with the tools that empower human potential. Because living up to our potential, folks, it's something you and we must master each and every day. So let's begin our day with empowering beliefs, what I like to call the 9 rules of the universe. You know how this goes. The universe says to us, number 1, if you don't move, I won't move. Or said another way, if you sow, you can reap. But, folks, we first must sow. Number 2, unless we change what we are, we will always have what we've got. Rule number 3, the way we do anything is the way we do everything. Rule number 4, leaders are readers. And that always begs the question, what's the last book you read, and when did you read your last book? It's not what the books cost. It's what it will cost if you don't read. Rule number 5, don't say, if I could, I should. Say, if I can, I will. Rule number 6, wherever you are, be there. On your way to work this morning, concentrate on work, not on home. And then on the way home from work, concentrate on home, not on work. Number 7, don't set your goals too low. If you don't need much, guess what? You won't become much. And rule number 8, happiness, it's not something we postpone for the future. It's something we design for right here, right now. And finally, rule number 9 of the universe, time is our most valuable asset, and I do appreciate all the time that you spend with me each day. Thank you so much for doing that out there. And respect the rules of the universe, folks, and it will respect you. Let's go check out the respect in the markets out here. Right now, we've got the Dow. It's trading up 139 points. Trade out at 16,462. S&P up about 15 points. Trading at 1872. You've got the NASDAQ Composite leading the charge the upside, a little over 1% to the upside right now at 49 points. Trading at 4204. Russell 2000 up about 1%, up $11.50. Trading at 1163. NDX 100 up over 1%, trading up 42 points at 3613. New York Stock Exchange up a nice healthy 77 points. It's trading at 10,509. You've got net advancing issues 1469. All that's needed today. We got a lot of time left in the trading session. We're only through the first 39 minutes, folks. A lot of time left, but if today you see net advancing issues of greater than 818, the bulls will have taken control of the New York Stock Exchange. It would say if you're short, be very careful out there because there'd be lots of bounces, lots of bullish signs. We'll go take a look at these markets and see where they're going to. That's the call on the index. Their call number, by the way, that's 877-927-6648. Would love to hear from you. Give me a call, folks. We can take a look at your stock chart. Things that are moving in the market here right now to the upside leading the charge. You got Priceline. That's up about $20. It's trading at $12.12. Google's up about $12. Biogen, it's up about $12, really 11. VIP Shop Holdings, that's up $10. Amazon up 6. Baidu up 6 out here. Wynn Resorts up 540. You've got Jazz Pharmaceuticals up 5. Regeneron Pharmaceuticals. So you're seeing a little bounce take place here in the biotechs. You've got Prana Biotech. That's one that's taken that one's getting a major haircut. It's down 70% this morning, trading down 692. It's got volume behind its move. Tesla's off $4 this morning. It's trading out at 208 and change out here. You've got Dome Tar, UFS is its ticker symbol. It's off 3%, down 370. CF Holdings down $3 off 1%. Puma Biotech, PBYI, off $3. We've got Green Mountain Coffee Roasters, called Keurig Green Mountain Coffee Roasters. It's now down $1.79. Where do we begin? Well, let's begin. Where do we begin out here? I think what we need to do is we've got to certainly focus in on what's going on in the weak link. So let's go take a look at as we take a look at the indexes. Let's start here Let's take a look at the NDX 100. So let's start with the NDX 100. See what we've done here. Number one, what you're going to see what the NDX 100 did was it formed a 1 to 1.618 A to B equals CD. The A point on this was a trading session on March 6th. The high out there was 37.38.32. The B point down here at the low on March 14th, down at 36.26, makes a retracement to form your C point of the A to B equals CD to the downside. That was the high on March 21st. 1 to 1.618 would have taken you to 35.37. Didn't make it all the way down there. It made it close enough. It got down to the low of 35.43 on Thursday. Friday, what did we have? Friday, we had kind of a wild ride in the market. Doesn't mean we can't have another wild ride today. But it was really, in price-wise, just a slight move higher, almost really more of a sideways move. Hey, we do not have that going on here today. So if we take a look at now, what else do we see out here inside of the NDX 100? We see that what the bears were able to do is only push things down to their trend line. This is a trend line that takes us back into 2013, specifically into the low that was formed on June 24th, 2013. You too can draw that trend line on your charts out there. Just use the actual low. So this is a trend versus a channel line. We're just using the actual low of the bar from June 24th, and then I'm just simply using the low of the bar here from February 5th out there, and that low is 34.1888. That's the trend. So the strongest move to the downside last week, this is a daily chart we're looking at, was only able to do what? Exactly. It was only able to push things down to the bottom of the trend where you'd actually like to be a buyer. That doesn't mean that it can't push lower, that it won't push lower, but it means if we take a look at the best punch that was thrown out to us last week, by the bears out there, all they were able to do was get down to the trend line. So you'd have to say, on a longer-term basis out here, that things are still intact from a trend standpoint. You formed a 1 to 1.618, A to B equals CD. You're moving down towards a over. You certainly did not get into an oversold condition. That means below the 30 level inside the 14-period RSI. You got down to 37.68, so you got down towards that level. So you'd expect a bounce. So where could this bounce take us to? And what kind of volume do we have behind the bounce out here? Well, if you take a look at coming from the high of March 6th down to Thursday's low, you're going to see the 0.382 level. That's already been achieved here this morning. 36.1766 is the number. The actual inter-session high that we've seen so far, 36.1842. So we've seen a dead cat bounce. What is more likely? We'll go take a look at some volume out here. What's more likely? You're more likely to get into the 36.63, maybe even 36.96 out there, because at 36.63, you're looking at the 0.618 retracement. That would be normal. That would be natural out here. If all that the NDX 100 is able to muster, though, is a move up into the 36.17 level, and the market starts moving down. Could be inter-session today, could be tomorrow. But if the 36.17 area holds as a resistance level, and then the market starts to move down, then we'll start to see this trend line here get busted inside of the NDX 100. But until then, until that happens, all that we've seen here is a move down in what has been one of the strongest indexes on the way up. All we've seen is the bears be able to take price down to the trend line. So that's what's going on inside of the NDX 100. If we go take a look at the QQQ to put things in perspective out here, let's go see what kind of volume we have behind this move out here. The Q's forming a 0.618 Gartley buy pattern, doing that on Thursday. Volume so far this morning as it hits the 0.382 retracement level, 88.29 is the number. What it's hit so far is 88.26. Volume so far, 10 million shares behind the move. Not too shabby for the first the first 45 minutes of trading out here. Not too shabby at all. 10 million shares. What's 10 million going into? 40 million on the way down, and that was on March 26th. So the bulls have an opportunity here to really put some volume behind the move. So that's what we need to pay attention. What else is it going into? Well, it's going into this March 24th level, and that is the volume there was 77 million shares out there. So it really says that the real line of resistance, when you take a look at volume, you take a look at the retracement level at 89.47, 89.39 probably becomes the target range for where price wants to move to inside of the Qs out here. As long as we're inside the ETFs, let's go ahead and let's stay with the IWM. Let's go see what the IWM is doing out here. Not much. It has, if we take a look at its retracement from its highs. Let's go take now. What we know is off of the bottom, meaning the February 5th standpoint, all the way to the high that was put in here on March the 4th. The low was 107.27. The high out here was 120.58, wide-ranging bar, accelerated volume. It had everything there. Was a confirmed A to B equals C to up. We have not seen that unfold or take place. What we've seen, though, is a retracement below the .382 level. 115.50 is the number. You're trading at 115.43 here right now. Volume thus far behind the move today inside the IWM, 8.5 million shares. 8.5 million shares is going to the downdraft of 70 million shares. Now, if I do my math right, it's not close. Because even if we got 8.9, say we do 9.5, 9 times 6, 54, yeah. Still, you'd have to see this volume that we saw take place here right as we got out of the chute today. You'd have to see that volume maintain its pace for another 5.5 hours out there, and I don't think we're going to see that. So in the IWM, what we're seeing here, if we take a look at where could this bounce to, if we look at retracement just simply coming off of the high from March 4th down to low last Thursday, dead cat bounce. So you can see that the IWM here now, so maybe this is telling us something. So what I would be taking a look at is if we were to see a failure here, and we have to plan for, you always have to plan for both sides of this trade. My opinion is you should plan for both sides of the trade out there, right? You should have exit strategies, whether you're long or short. So as we take a look at the Qs and the NDX 100, which we just did, that showed that it moved down to, in essence, to the trend line and was was the strongest index on the way down. Now what we're seeing here is we're seeing the Russell 2000 have a weak performance on this bounce here this morning. So if we were to see a reversal, what would that say? Would that say that you might want to look at the IWM for the short play out here? I would have to venture and say the answer is yes out here. It has not made, and why do I say it's a weak link? Because it hasn't made the 116.32 level. That'd be your .382 retracement, whereas the Qs have been able to do that. Let's go check out the other ETFs out here. Let's take a look at the SPYs, see what the SPYs are doing. Right now, the SPYs trading at 186.88. The SPYs here have been doing what? Consolidating sideways. Where do the SPYs run into the top of the consolidation box? Well, I'd have to say somewhere around 188.96. Could be a little bit less than that. Your trade right now, 186.85. Volume this morning on the bounce here. 24 million shares, not too bad, considering we did 101 million shares on Friday. That was after making a low with 142. So thus far, still a light volume type of a bounce. If we take a look at its retracement out here, come from the high of just from March 21st down to the low here on Thursday. What we'll see is that these SPYs here have made the .618 retracement. Is that the C point of an A to B equals C to the downside? 187.07 was the .618. You're trading 186.89 right now. I don't know. I do not know. We're going to have to really be paying attention to what's going on inside the weak links inside of the market. When we get back, let's go take a look at what is the strong link in the market, and that is the Dow. That's the Dow Diamonds. We'll check that out as soon as we get back. 877-927-6648. As we speak right now, Dow's up 125. S&P is up about 14. We'll be right back, folks.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Wouldn't it be great if you could get a red light, green light indicator that gives you signals on 25 different future contracts? Now you can with Taz Signal Box. This red light, green light market profile system dynamically updates 24 hours a day and provides you with important trend and trade signals on 9 different commodities, 9 different indices, and 8 different currencies. Right now, you can receive a free 2-week trial to Taz Signal Box. For all the details and to find out how the signal box works, visit the front page of TFNN.com.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Let's go check out the Dow Diamonds. Right now, Dow Diamonds are trading out at 164.12. If you're watching us on Tiger TV, you see the yellow rectangular box. That yellow rectangular box is what we refer to as a consolidation pattern. And in essence, the Dow Diamonds have been consolidating anywhere between the, really, if you take a look at it, if you come and take a look at the low here from February 5th, inside the Dow Diamonds, that number is 153.12. If you run from that low all the way to the high that was put in here recently, that was back on March the 7th, that number is 164.89. If you go from the low to the high, you use your retracement ruler, what you're going to see is the 0.382 retracement takes us right to the bottom of the consolidation box. Now, the bottom of the consolidation box at price level, what does it say, about 160.39 or something like that. If you take a look at the trading session back here on March 14th, you get to 160.38. That had 8 million shares. That 8 million shares, though, was going against 9 million shares. That was Putin Monday. That was March the 3rd out there as the market had moved lower and then just bounced back significantly the very next trading session. Now, the top of the box is where price has moved into right now. What is also taking place is price is doing really a couple of different things out here. The first thing that it's doing is trying to get in, tackle the swing point from March 7th. That's really the swing point, in essence, at the top of the box out here. Now, the low of that is 163.81. You're trading inside that right now. The top of that is 164.89. This has volume of 7.3 million shares. We've been trading for just under an hour, and it's done 2.6 million shares. So volume is pretty good in the first hour of trading out there. Now, it's not going to keep up for the rest of the day. I don't have a calculator handy to give me the estimate of what that's going to be at the end of the day. But what I can tell you at the end of the day, it's the last time I'll say that, maybe the last time, is the following. If price closes inside that swing point, maybe it doesn't test the high of 164.89 today. If it doesn't, even if it's on light volume, guess what? Just simply says it can move up to the highs, or should move up to the highs. If you're pushing into the swing point with volume, meaning more than 7.3 million shares, it says it's likely you just increased your probability that you're going to go take on 164.89. But what it's also going to do, it's going to get back into the highs from December 31st. The low of that session is 165.51. That's really the number to be paying attention to, and there's only 5.6 million shares at that swing point. So back here on the trading session of March the 7th, that was actually pushing into, which had 7 million shares. It was pushing into the swing point with high, meaning into the session of December 31st, never got up and tested the top of it. We've now been consolidating at the highs right here. Hey, look, quite frankly, all that the Dow Diamonds need to do from a bullish standpoint is 164.89, get above 164.89, do it with more than 7.3 million shares, 7.38 million shares to be exact. You will have confirmed an A to B equals CD to the upside out here. Of course, if it can't do that, if it can't bust it out, what does it do? That's right. It tries to bust them on down out here. So that's what's going on with the Dow Diamonds. Let's go take a look at the commodity sector out here. Let's go see what Goldilocks and silver is doing as we speak right now on the daily chart. Not a lot going on here. Really a sideways move. 1293.30 is where gold is trading at. We've seen no kind of reversal whatsoever. What's that mean? 1262 is the next stop on the way down on the Fibonacci retracement escalator, or elevator, I should say. That is the next floor of the elevator, 1262.10, the 0.618 retracement level. Inside of the silver complex out here, silver right now also not doing a whole lot, really traveling sideways up just a tad. It's trading at $19.84. Its next level on the way down could be as low as the bottom of the consolidation box, which would take you back to the January 30th area. The low there, $18.97. We look at light sweet crude out here. That on Friday moved up to a high out here of 102.24, where it basically completed a nice 0.618 Gartley sell pattern. Great Fibonacci numbers coming together right in that area. It has done basically nothing here as we speak today other than just simply move sideways at this stage. That's what's going on inside of light sweet crude. If we take a look at the 30-year Treasury, the 30-year Treasury out here pulling back this morning. It's trading out at 132.23. Let's see, what kind of volume do we have behind the move? 186,000 contracts here, testing 376,000 contract from March the 20th. It is closing above that high, which is 132.20, not by much, but above that high. If it closes above 132.20 out here, 132.2, really is that would be a rejection of a swing point on lighter volume. Right now, we've got the Dow. It's trading up 132 points, trading out at 16,454. The NASDAQ Composite still holding its own, and now we're into the trading session of 47 points, a little over 1%. We'll be right back, folks.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released.
The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com, educating investors. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. Dow is up 133 right now. S&P up 15. Composite up 47 points out here. Nice market breadth in the market out here. You've got advancing issues outpacing declining issues inside of the New York Stock Exchange, about 3-1, a little over 3-1 as we speak right now. Net advancing issues, 1,592, only takes 818, I believe, is the number in order for the bulls to take control of the New York Stock Exchange. In fact, let's take a look at a couple of different things out here. First, let's look at the weak link out here, arguably the NASDAQ. Now, I've got a 120-minute chart on my screen. And let's take a look at what it has done. Then let's take a look at what it is likely to do. So what we see that took place inside the NASDAQ is back on the trading session about 8 o'clock in the morning on March the 19th. It formed a nice 0.786 Gertley sell pattern. As you know, the outcome of any Gertley pattern, buy or sell, you've got 5 different outcomes. This achieved level 5, which was that the Gertley buy, in this case, formed the C point of an A to B equals CD to the downside. What we saw here was a 1 to 1.272 A to B equals CD to the downside. That took place here on the trading session at 10 a.m. 120-minute chart we're looking at. That was on 10 a.m., March the 27th out there. As it was doing that, it was also forming a price relative strength divergent pattern. So that was also giving us an indication that the bears were running out of energy. What do I mean by that? If we take a look at this push down here as it made the 1-to-1 A to B equals CD to the downside at 12 noon on March 24th, that relative strength indicator reading down around 21.73. When it made a lower low, that was back at the session here at 10 o'clock, the reading was 29.07. That is a indication that the bears were losing the steam out here And that's exactly what has taken place. So let's go ahead and let's remove those patterns, since not that they're not valid, but we don't need those, just to clean up the screen out here. Let me do that. Let me do that. Let me do this. There we go. So now when we take a look at where is price likely to come to, really got a couple different things. First of all, let's take a look at coming from our swing point high. That swing point high being 10 o'clock in the morning. That's the session of March the 6th. 3730 is the number. We're going to come all the way down to the low that came in here as the low was being formed, 10 o'clock in the morning, March 27th, 35.35 and a quarter. What we'll see here is that the 0.382 retracement has been hit thus far, 3609.64. So that's a dead cat bounce. That's the minimum that one should expect on any kind of a bounce out here. Now, we have what looks like a potential A to B equals CD to the upside that's setting up. The B point here, which is the trading session from 12 noon. This is from Friday, right, March the 28th. The high, 35.85 and a quarter. Now, there were 87,000 contracts as that high was formed. That was on Friday. If we take a look at today's bounce, even stronger than Friday's. However, SpaghettiOs. Between 8 and 10 o'clock this morning, all we saw were 68,000 contracts. 68,000 contracts, taking out a B point, 87,000 contracts. No, I don't think so. So it doesn't have a confirmed A to B equals CD to the upside. Does that mean that it can't complete the pattern? Of course it doesn't mean that it can't complete the pattern. But from a bullish standpoint, a reversal of fortune, a reversal of a downtrend that clearly the NASDAQ has been in, if you were bullish or if you were bearish, and we're looking at both sides are always looking for clues out here. You wanted to, if you were bearish, you wanted to see that B point taken out with lighter volume. Well, guess what? You got that. Now, what does the A? Now you're trading above that. Well, you're not even trading above that area. It's giving it back just a little bit here. Your 1-to-1 A to B equals CD would take you to 36.1745 out here. 36.1740 in that range. That would be your 1-to-1 A to B equals CD. So that's one outcome. Now, is there a potential that we've seen a small little Gartley pattern come close to completing? That's coming off the swing point out here, just simply from 10 o'clock in the morning on March the 26th. And if I go down to the low, you'll see that the 0.618 retracement level, that was hit. That's where you're trading at, or approximately right now. Your 0.786 takes you up to about 36.23. But what we're really looking at is if we can see some legs inside the NASDAQ. What is more likely, and the better and ideal pattern to actually sell, is where you see the NASDAQ make a retracement up to about 36.55. That would put in about a 1 to 1.618 A to B equals CD to the downside. That would set up a nice move. That would set up a what would look like a good reward to risk. I don't know what kind of move it would actually set up here, but we'll see if it can actually pull that off. So to get to the 0.382 retracement level off of the bottom, you have to also understand, or what I'd like you to understand, it's a natural place for traders to perhaps take some of their positions off, to know that you're going to get to that first floor. People get off of an elevator. You know, if you ride typically they get off of an elevator, right? Then they'll just keep riding up and down out there. And in this case here, that's the first natural area for the NASDAQ, the NQ, I should say, to get off of its elevator. And that's what we've seen here thus far. Now, volume on the pullback, 43,000 contracts so far during this. Now it's actually pushing higher. So it's pushing higher. So in this case here, you got 43,000 going against, and this session here does not end until 12 noon. So we've got a lot of time left, an hour and 20 minutes. So you got 47,000, in essence, pushing into 87,000. So from a bullish standpoint or bearish standpoint, what you're monitoring right now is the price level of 3601.25. And if it takes that out with more than 87,000 contracts, you're likely going to see a move up to about 36.55. That's a pretty good move, another 55 points north. And that's inside of the NASDAQ, the NQ 120-minute chart out here. If we take a look at, is the move real? What else is going on out here? Well, what we want to take a look at is the euro Japanese yen. Quick swig of the water out there. Euro Japanese yen beginning to pull back a little bit here as it had made its 0.618 retracement at the 142.31 level. Now, what it's also doing, and why is it pulling back? Well, because it got into that extreme overbought condition out here. Now, the candle session on this 120-minute chart, which, by the way, this is over at 11 o'clock, so we've got 20 minutes left on this session here. The currency is trading on different time frames than the futures market is. If we take a look at this time frame here on the 120-minute chart, it's formed a little key reversal session out here. Not good. It's a key reversal session. It's a bearish engulfing candle. Of course, we're coming from a overbought condition. So the real key now inside the market, if we were to take a look at a currency pair, I'm going to assume that this is where it's going to close out. Just, I can't even check it. I can't check on it in 19 minutes because my show is over about 3 minutes before the close. But what you want to do, if you monitor the Euro-Japanese yen, let's assume right now that it's going to form this bearish engulfing candle. Things are certainly stretched, so this qualifies as a key reversal session out here. Stretched meaning we're inside the overbought area of the 14-period relative strength indicator out here. We're going to close in the opposite direction, well, assuming that it's just one red tick, meaning a close below the open of this session, which began at 9 o'clock here this morning. That says that if you see it close above 142.59 at any point in time here this afternoon, that would be extremely bullish. That would say that the Euro-Japanese yen is going to just simply move to the next higher level out here, 142.96, maybe even make a run for the 143.77 level, which is what I would expect to actually see and occur out here. So this is not giving us any kind of, it's really doing what it should be doing after running a pretty nice race out here the last two trading days, the first one being Friday, as it moved higher. And even though our markets moved lower and they sold off, the currency pair was saying, I don't think so. And then last night, it really didn't do a whole lot. It began moving at about between 3 and 5 a.m., and really between 3 and 7 a.m. is when we saw the largest movement inside the Euro-Japanese yen out here. So far, so good for the bulls, not so good for the bears in the message that the Euro-yen is sending off to us. Let's take a look at now. What did I want to do next? I knew there was some kind of strategy here that I was following, and I seem to have gotten off course out here. So what does that mean we're going to do? Let's go take a look at the New York Stock Exchange. That's where I was headed to. Thank you for reminding me. I know somebody out there was saying, Steve, New York Stock Exchange, New York Stock Exchange. Okay, so thank you for saying that. Now let's go take a look at the New York Stock Exchange, because that's the wider swath of the market. And that's one where we could see the actual bulls take charge today with more than 818 net advancing issues. So let's look at the NYSE, and let's take a look at it over multiple time frames out here. Let's start with the monthly. Let's do that. Let's start with the monthly chart, and let's look for bullish, bearish signals out here inside the NYSE. What we're going to see here is on a monthly chart, the NYSE is about as bullish as you can get. On a monthly chart, it's almost near its session high for the month of March out here. The actual high so far that we've seen here thus far is 10,550. You're at 10,519. It is up over resistance. Of course, that resistance was from the month of January. That was erased last month with a nice bull sash candle. There's nothing bearish about this New York Stock Exchange. None. Now, the only thing that it's dealing with here, and it's already over it right now, it's traded over it, and this is a monthly chart that we're looking at as it's over the 2007 highs out here. October of 2007. It got above it, came back and tested it. It's rejected that. So on a monthly basis, we're seeing a bit of a break. Now, this is not a bit of a breakout, folks. It's a 6,000-point breakout. It's why we need to be very cognizant of what goes on inside the New York Stock Exchange. So on a monthly chart out here, if you see something bearish, give me a call, because I am absolutely missing it inside the monthly charts for the New York Stock Exchange. Let's look at the weekly chart for the NYSE. NYSE, it has a price relative strength divergent pattern. Now, it formed that, and to confirm that, I should say, the week ended March 14th, bear sash candle. The problem is that it had no follow-through. And, in fact, it pretty much negated that candle session the following week on March 21st. So now the real key here on a weekly basis, so the monthly is saying, hey, very bullish-looking stock chart out here. Above the 2007 highs, closing near the top of its session for the month out here. Well, I don't know where it's going to close. Trading at near the top of its session, about, 30, 40 points off from there. And if it clears the high here from the week of March 7th out here, that level is 10,550.24, so that's the high for the entire month. If you get a close above that, then there is absolutely nothing bearish about the NYSE weekly chart out here. That's about, so you're 519, so that's 520, another 30 points higher inside of the market. That'd be a real strong move into the end of the session here at the end of the trading day. But anything is possible. You could see some sphincter muscles of the shorts out here because the shorts, you got to admit, they've got to believe that they have the upper hand. And they have to believe, and I believe that they have the upper hand here because if we take a look at all the rallies that we've seen here over the course of the last couple of weeks, we've seen rallies being sold, not dipsters, not the dipsters here, if you've been buying on the dips, other than buying on Friday's dip or going into Thursday's close dip, those are the only ones that have been rewarded out here. In any event, let's take a look at the daily chart, see if there's anything bullish, bearish here on the daily chart for the NYSE. And the NYSE, hey, this doesn't show anything really bearish at all. In fact, it's above. If it closes today above the bearish engulfing candle that formed out here on March 26th, so on a daily chart, it's saying any close above 10,470.87. You're at 10,516 right now. You've taken out resistance area. Yeah, it's got this swing point out here from March 7th, but there's no resistance from a bearish standpoint. It just is a swing point to take out. You're trading inside it on the daily chart. That says it wants to go ahead and test that 10,550.24. So the New York Stock Exchange is absolutely not giving us any kind of significant, is giving us no reversal signal whatsoever. None that I can see. So anyways, that's on the wider swath of the market. Let's go check out some of these equities here that are moving and grooving this morning. Let's see what we've got here. You've got, as I mentioned, Priceline is leading the charts. The upside up $13. Bib. Let's take a look at that IBB. Let's go see what the IBB itself is doing this morning here. So that certainly has the biotech sector. That certainly has been one of the leaders with inside the NASDAQ. It's up 2% this morning. Let's take a look at the daily chart here. So the daily chart is trading out at 234. Boy, it has a long way to go before it finds a significant resistance level, meaning it could travel. First, if it can clear about the 236.40 area, that would be a nice bullish sign. It should find real resistance about the 253 range out here, and that is on the IBB. Let's take, I don't even see really much of an A to B equals CD down other than just kind of a really more of like a straight line move down off of the highs out here that were formed back on February the 25th. So, no, there's nothing bullish. I'm not saying go out and buy the IBB. You've seen no bullish reversal signal here today. Today's session is nothing more than an inside trading session out here, so maybe that spells more further weakness to come. It did move into the oversold territory, so very bearish is when you get into an oversold territory is just simply moving sideways. And so far, that's what you've got inside the IBB as we speak here at the moment. What do we have moving? What other things are moving in the marketplace here? Let's see, percentage-wise. What do we have, any big percentage gainers out here? You've got affiliated, what is this? AMG is the ticker symbol. What have they done here? They completed investment in Southern Sun Asset Management. So let's take a look at the daily chart. Well, let's take a look at the let's take a look at the daily chart here. It's trading at 198. It is trying to take on a resistance level. That is set up by the swing point out here from March 10th. That had volume on that session of only 322,000 shares. Today, so far, you have done 238. So it's trying to take out that level. Looks like it's headed for the gap that was created on January 24th. We'll be right back, folks.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy. A set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders, take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days, unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Welcome back, folks. Dow up 128, S&P up 15, NASDAQ up 48. Thus far, the bulls have been able to hold on to their gains out here. So let's take a look at what does this mean? What should you be looking at today as we just set up what's going on inside the market. So let's start off by taking a look at the VIX index. The VIX index right now, trade out at 1391. Now, Stevie here, he uses the VIX index as a different tool. I call this a liquidity indicator. And the liquidity indicator says if you are trading below the 50-day exponential moving average, which right now, that's priced out at $14.79. You're trading at 1391. What that tells you is that the market has liquidity, and that what we would see is a market that pushes higher. When the VIX index trades above the 50-day exponential moving average, it tells you the market is not liquid. That's when you start to see pullback. That's when you can start to see some real carnage in the market out there. That's where folks will talk about now. Everybody uses the VIX index differently. You know, you can read about it as folks talking about it as being a fear indicator. I don't know how to utilize that terminology to trade. You know what I mean? It's like if you want to call it a fear indicator, then how are you using that as a method for being able to trade as a trading tool? So I got rid of that whole indication a long time ago, because what I found was that when price moved below the 50-day exponential moving average inside of the VIX, I'll give you an idea here. Okay, If you come back to November 29, 2011, you had the VIX trading out, closed out at $30.64. So November 2011, if you said that the VIX was trading, that was a high VIX read, and therefore there was a lot of fear in the marketplace, well, how do you explain that the VIX went from $30, was 32, I'm not even going back to the highs, but I'm specifically choosing that day of March 29, 2011 for a reason. And why is that? Because it dropped below, that day it dropped below the 50-day exponential moving average. So if you were to use that as the so-called, boogeyman fear indicator out there, and you were going to try to implement that into your trading style, how could you even do that? You can't. And just because it's at $32, does that mean anything out there? No, the meaning was it dropped below the 50-day moving average. And what took place in the market? The VIX stayed below the 50-day moving average all the way until it actually pierced it for one day and then failed. So it was a one-hit wonder. That was on March the 7th, 2006. And what did we see inside the S&P 500 in that same time period? We saw it move off of the lows in that was Thanksgiving. We came back from Thanksgiving on Friday as the markets are open. That was back in 2011. What did the markets do in the S&P 500? They just simply continued to motor on higher into when? Into May. Yeah, into that sell in May 1st to be exact out there. So the 50-day moving average, exponential moving average to use on the VIX, I say, folks, use it as a liquidity indicator and get rid of that whole fear thing, because as long as prices traveling below that, if you just go back and you take a look at markets and see what does it mean and how can you use that as a trading vehicle, you'll find that this one is a PDG, a pretty darn good one out there. So as we speak right now, you've got it trading at $13.97. Look, it won't surprise me. The last, 5, 6, 7, 8 trading sessions, we've seen the market give back its gains, get back up to the 50-day, which is $14.79 right now, right around that area, and in fact, kind of finish flat or slightly up and not give us a whole lot of information. So that's one thing you want to take a look at. The next thing out here, and sorry to belabor it, but I'm just trying to prove a point. I'm really not trying to prove a point. I'm letting the market prove the point to you. And that's what we should always be open, is let the market give us new information. That's the beauty about the market that we trade. We get cards dealt to us each and every day. Just stay inside your time frame out there. Watch for the New York Stock Exchange. You get more than 818 net advancing issues, and the VIX below the 50-day. Starts to tell you the bulls are doing everything they can to take control. Stay tuned, folks. Our man Basil Chapman is up next. We got Larry Pesavento, Daryl Martin, David White, the Tom O'Brien Show from 4 to 6. Have a great Monday. Look forward to seeing you first thing tomorrow morning.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.